Good afternoon. It's July the 18th, 2013. I'm Alan Barry Labucan. I'm the Chief Market Commentator for Agoracom, and with me today is our founder, George Cholis, the founder of Agoracom. We got a lot to talk about on today's show. We've been mulling over some chatting about what's going on with the venture market, some things that need to change there. We're going to talk gold trends, interest rates. We also have some light to shine on the mining stocks turning around. So as I said, we've got a lot to talk about. Let's get right to it. George, you made me aware of this article on the Venture Exchange. Why don't you shine a little light on it for the audience?
Yeah, great article that came out of via Twitter from Ryan Fletcher over at Zim2. It's over on the Vancouver Venture blog, and the title, Venture Exchange Model is Dead. So the gist of it is, and I want to talk to you about this, and I think this model is dead, but the gist of it is what I've seen over the past few years I think has led to this downfall, which you just see a bunch of people getting together because the TSX Ventures turned into a for-profit organization, so it's almost in the best interest to try and rack up the listings. And we're getting these listings where you get a bunch of guys together granting themselves, their friends, their families, all sorts of stock at 5 cents, even less. I've seen fractional half-penny shares out there. They raise a couple $100,000, and then the goal at that point is just to pay themselves a decent salary and keep selling paper at the end of the day. And unfortunately, too many of those came onto the Venture Exchange. And I fully think that's why we're here. The alternative that they're talking about is the way things used to be run on the Vancouver Stock Exchange, which is you find a pretty prospective property, you raise a great amount of money, and the example they gave, I'm going to look down here for a second, so pardon me, is the example of Lowell Copper, where they're raising money at 54 cents, and they've raised $11 million, so that they don't have to go back and do the dog and pony show and just keep raising just for the sake of keeping lights on. It means that these people are serious. They're committing a lot of money in order to get this project to where it's got to be. And they're saying that, I love the conclusion. So what does the $11 million raise at a pretty good premium in this market say to the schmuck CEO trying to raise $200,000 to keep his broke pubco alive for another year? That's right. Your model is dead. I think they're dead on. What do you think of what you've been seeing on the venture? You analyze so many companies. I'm disgusted in the number of companies that put out there do nothing but sell paper.
Well, I'm seeing that a lot, and I mean that's sort of the genesis of why I wrote that article. We talked last week about, zombie companies out there, and I really think that they're a total waste of time and should die as quickly as possible. These companies, just like that article suggests, they've got iffy projects. They've got next to no money, but they're able to, kind of corner the market on their stock. They get a bunch of options. They try to promote the heck out of it on nothing but hot air and expect that stock's going to go up. And then they're going to do a financing, and then they're going to roll in a really good project and blah, blah, blah. The story goes on and on.
And they never actually put anything into the ground. They give an example here of a company that raised $1.1 million since 2011. They put $119,000 of that towards project investigative, whatever that means, right?
Yeah.
I don't think that means drilling, that's for sure.
No.
But $653,000 that went to management fees and consulting fees. A classic example of things that are going on up there.
There's one of the things that I do on a daily basis is I go through and I look at all the news releases that go out by public companies. And back in the, let's say, the 2004 to about the 2008 window, every day I would find drill result releases that I would have to, they were good enough right off the initial hop that I would have to go and do additional homework, try to find out where the project was, try to find out the 3 dimensions, where the deposit was lying in the from surface, all of this stuff, because the results grabbed my attention. Nowadays, it's like I look through there, and sometimes I can't find 3 a week that make me want to, catch my attention
Mm-hmm.
and make me want to do more homework. And it's just sort of indicative of the whole market that there's a lot of these companies out there that are doing what this article suggests. They're just, they're creating phantom companies that really, there's no other interest than to someday try to promote the stock up, get a financing, they hope, and God knows what they'll do with it then, but not
who's to blame? Okay, because the obvious one first, I think, is the venture exchange. They became a for-profit corporation, which means I think they let their guard down, and the more business they could flow in to the bottom line, the better. So give me your 30-second view on that. Is the venture to blame because once it became a part of a public company?
Well, I think if you're going to throw blame around, there's a few different areas that you can throw it around to. One, probably the exchange has some to blame. Obviously, these people that are trying to, create these phantom zombie companies,
yeah,
they're to blame. But don't give the investors out there a pass either, because they're the ones who are also going in and buying in on this instead of doing their homework and saying, asking those questions like, when are you going to drill? If the investors out there were more diligent, maybe we wouldn't have all these.
Okay, let me put you on the hot seat. Have you ever been caught in a deal where you bought some stock and it went all the way down to zero or sub pennies or below a nickel because it didn't have the goods, but maybe you bought it on hype and promotion? Have you ever been stuck in that situation, or did you always do your homework and stayed out of that?
Absolutely. I can say this without a shadow of a doubt. I've never been caught in one of those things because I've never put a dime into a stock that I didn't look at the drill results and have. Now, that doesn't mean that I haven't invested in stocks that have, I paid more and they've gone down to next to nothing. But it's not because they weren't drilling or they didn't have some good drilling results or there wasn't a fundamental reason to buy them.
All right, so let's then hop onto the good news because we know that the world isn't so great for small caps. You put up a blog post a couple of days ago. Gold oversold, but the trend is improving. Talk to me.
Okay, well, first of all, let them know where they can find that at agoracom.com in the blog section. I want everybody to go read that, do your homework. I write those things for a reason.
Right.
But yeah, I touched on a lot of topics in that article, and one of the things that I talked about is, again, it's looking at whether it's an individual stock or the industry in general, looking at it in an intelligent fashion. If the average cost of producing a commodity, I don't care if it's gold or oil or whatever, if it's costing you more to produce that than you're getting for that, how long can you do that? Not very long. And when a commodity gets to a price where it's close to the average cost of producing that throughout the world, usually that's a floor. For example, oil right now, we need about $80 or better on the price of oil. If it dips down to $80, you're pretty safe to start buying oil, and you're going to do good.
Okay.
We just did that with gold. Gold got rocked down to $1,200. I think it dropped from about 15 and change, 1600, just got smoked down to 1,200 really, really fastly. But then when I'm looking for a turnaround in a trend, it's just like when I'm looking for a top turnaround. I want to watch what happens when when I want to see something pulling back. What happens on the rallies? Do they go lower than the previous high? Same thing on the bottoming. I want to see that the lows are increasing in value.
Higher lows.
We hit the $1,200 low. It rallied off that. When it came back, it didn't get down to that $1,200 again. Rallied off of that, didn't come down to the previous low. So now we've got that rise, that higher lows and higher highs trend, and that's why I think we're in the start of a much more bullish trend for the price of gold.
Yeah, but you don't think you're a little early? You don't think you're making that call a little early because, we all know, and we're not going to spend time talking about it because it's been beaten to death that gold markets are manipulated for various reasons. Isn't it in the best interest of the powers that be that to take gold even lower and break its back at the end of the day? How do you fight that? How do you fight that?
Well, if everything's manipulated, you got to always remember that there's two sides to every trade.
Okay.
And if something's getting beaten down, I just heard Carl Icahn, he was at the Seeking Alpha conference the other day, and he was talking about a stock that they're Herbalife. Him and there's another guy like him that are sort of battling. And this other guy goes out in front of a bunch of investors and says, I took 20% short on that stock.
I believe that was Ackman.
Yeah, Ackman. He was manipulating, he wants to manipulate the stock down. That's why he went out and blasted, hey, guess what, everybody, I'm short the stock. And Icahn says, well, you know, that's pretty stupid to do, because now the other guys on the other side of the trade go, oh, well, if we squeeze Ackman, we're going to make a lot of money. And Carl Icahn did exactly that, made himself $250 million. No matter who's manipulating something up or down or sideways,
right. Okay,
there's always another side to the trade. And when things get oversold or overbought, people are going to look and say, well, is it time for us to go long? Do we have more downside risk? I heard a technician the other day talk about maybe 1,150 is the ultimate low. Well, if I'm off by $80, I'm not too concerned.
Sure. You can't pick the absolute bottom.
Yeah, exactly.
And you know, and this brings up a point you and I were talking about off air, which is how good are the deals out there right now? Yes, zombies going to die. We know that. But how good are some of the sweet deals out there? And I know that I remember in the .com days when we're all making really easy money, this little tiny resources company that had some great stuff going for us, trading at 25 cents. And me and a couple of buddies looked at each other and said, why don't we put in 5 or 10 grand, let it sit there for a couple of years. If it gets back up to $1.50, it's easy money. How much lower can it get? Well, we didn't do it, unfortunately. And 7 years later, Barrick Gold bought the company for $18 a share. That was Arizona Star Resources for some of you experienced people out there. And we remember kicking ourselves because it just couldn't go any lower, and it was a great company. It wasn't a zombie, and we didn't pull the trigger. We could have made 72 times our money at 5 grand had we held off. So let's say we sold halfway, we would have made 36 times our money. Are those kind of deals out there right now?
Absolutely. You know, George, I'm getting a little older, so I can't remember things quite as good. So I got it popped up on my screen here. Just, you know, I screen out. I probably follow about 150 companies. So I'm just going to start rattling off some names to you here of companies that are doing a lot of good work right now, and the stocks just I don't think are fairly valued. Fission Uranium Corp out in Saskatchewan. I think that they've got the next major uranium deposit that's going to get bought out, and I really like that project. Alpha Minerals is part of that.
Trading about 90 cents, right? 85, 90
cents?
Yeah,
89 cents right now. It's had a 52-week low of 52 cents, high of 93. Ultimately, I've done the math, and I think that, you know, if they get taken out for what I think they could, you know, looking at 2-3 times your money.
Do you own shares? Do you own shares, by the way?
No, I don't own any Fission right now. You know, another one that I'm looking at.
Alpha, you said.
Alpha Minerals is part of that same project. Again, it's an outstanding project that I think will be taken over. McEwen Mining, Rob McEwen, that stock's trading at $1.92, as high as $4.91 in the last year. The 1 year low on that one is $1.70. Here's a perfect example.
I usually say if a company is about 65 to, if it's a good company, and it's about 65 to 70% off its 52-week high, technically that's when I start legging in.
Well, guess what, George? I can go through a list here.
Well, not all of them, but you're giving us an idea. Yeah, we'll do more, but give us a couple more. Hey, by the way, Avalon Rare Metals, did you see that? I was away on vacation. I was stocking that thing. Great company. I was stocking it. Hit 50 cents. I was stocking at 62. Then I went away with the family. Hit 50. Closed at 80 today. 60% on nice volume in a couple of weeks. Big money.
That's a realistic project. likely to be a rare earth mine in the future. It's got a lot of good fundamentals, good people running the company. And, like you said, look at it, it was down at 50 cents on that one. Bear Creek Mining, one of the better junior silver stocks that I know of, has two great deposits. It's been as high as 381, currently trading at $1.64. International.
Give me one more.
International Tower Hill Mines is one that I keep on banging the drum about. This company has close to 20 million ounces of gold in Alaska. It's like 20 miles from Fairbanks, Alaska. It's just 4 miles off the highway. There's power going right beside it. Everything you could ask for. It's in a part of Alaska where you can practically work year-round. You don't have to worry about the weather that much. And, this one, what's the high on International Tower Hill? International Tower Hill Mines has a high of $3.21, currently trading at 62 pennies.
62. Oh, and what was the high?
$3.21 in the last year. You want to know what their all-time high was? In the last 3 years.
That's an 80% drop. That's an 80. So that's in the kill zone for me. I'm going to go take a close look at that.
Okay, hold on a second here. I'm just going to pull up the 5-year. The 5-year on that thing, it was over $10.
If that is now, any chance it's going to, and we're going to end on this. Any chance that it's going under? I mean, has it got the money? Has it got the stability to make it through this?
I think it's got like 30 cents in cash per share.
Okay, so then you're not buying it for 60 cents. You're buying it for 30 cents at the end of the day.
The last time I checked, all that gold didn't go anywhere.
All right, last point, and awesome. I love that little flash around there. Last point: U.S. Treasuries, interest rates. Right, the 10-year hit 2.7 and change. With Bernanke's comments, went down into 2.5 range. What do you think is going to happen with Treasuries? And that's important because the lower interest rates go, then the weaker the dollar at the end of the day. Where do you think it's going?
Oh, so you're going to get me ranting on the Federal Reserve now?
No. Just
a short rant. Well, I don't think that they're really going to do much either way. I think that's why they talk a lot, is because they can't really do a lot. They've been manipulating the interest rate curve since 2008. They've now become the market. The Fed owns 75% of the bonds out there. Until they can really, I don't think they can really do anything until they find a buyer that's as big as they are. And when you have a printing press of the currency, the dominant currency of the world, who's bigger than that? So, I really have a hard time seeing how they can stop, and to me, it boggles my mind how people get so wound up on what the Fed has to say.
Hold on, because bonds higher means rates lower, means a weaker U.S. dollar, means that's one extremely bullish factor for gold, silver, and
in a general sense,
commodities. So that's a big help.
In a normal sense, yeah, you're right, George. But that market is so friggin' manipulated nowadays that it's no longer a decent indicator of what's going to happen.
Alan, they're all manipulated. Look at everything that's gone on. Goldman Sachs got nailed for all of its derivatives back when the real estate market crashed. LIBOR, we all found out, has been manipulated. Apple just got nailed for manipulating the price of ebooks and all. Yeah. So, unfortunately, the whole manipulation conversation for me, has to go. And then what we have to try and figure out is where these guys want to manipulate.
Okay, well, get rid of all the manipulation then, and just look at the reality. The Federal Reserve is 75% of the market. Who can take them out of the market?
I don't think anybody can. If those bonds drop, then they're gonna two things are gonna happen. They're gonna lose their shirt on their balance sheet because of all the treasuries they've been building up, and two, how's America gonna afford to pay its bill if interest rates, if the 10-year gets over 3%, when it was at 1.7% 2 months ago.
And it's still not stimulating the economy. The whole idea that the Fed they've just done a horrible job to put that much money into the system. George, give me $85 billion a month, give me all the money that they had, and I guarantee you I would have created more jobs. What I would have done is I would have went and rebuilt the aging infrastructure in the country, the same thing that brought them out of the Great Depression. Those roads are all getting in terrible shape. The electrical power grid is in terrible shape. I just would have thrown all kinds of money at that, fixed everything up, put people back to work. The economy would have started working again, instead of just trying to put funds into the bottom line of the bank so that they can make a couple points here and there.
Their buddies at the banks make more money. And on that note, I'm going to end it because, and I'm going to say, thank God I don't put you in charge of the books at Agoracom, because you just be doing this by throwing the money around. Thanks, Alan. That was awesome.
Okay, buddy. Well, on that note, we'll wrap it up for today. It's been George Chiolis, the founder of Agoracom, and me, Alan Barry Labakan, the new chief market commentator for Agoracom. We're glad to bring you the show, and we'll see you soon. Have a great day.